Hello and welcome back to Bhavani JIIB. Today we are talking about retail banking, specially made for Indian bank employees aiming to crack JIIB. In our journey through Paper 4, Module B, we start with the ninth unit, important asset products or important retail asset products. Here we are learning about home loans, auto or vehicle loans, personal loans, educational loans, and mortgage loans. We will be learning about the salient features of home loans. Under this, we shall look at the very important home loan category. Okay. So home loans are taken for construction of new house or flat or purchase of old house or flat. Here the eligibility is either the person should be a salaried employee or a professional. Even NRIs, proprietorship firms, partnership firms, and corporates can avail home loans. The purpose is to purchase or construct the house, renovate or extend or repair it, or purchase of plot and then the construction of the house. Quantum of the loan. There is no upper ceiling in many banks, but net take home should be 30 to 40% of the gross income, and the amount for repairs and renovations varies from bank to bank also. Margin. Margin amount up to 30 lakhs should be bearing 10% margin, and above 30 lakhs up to 75 lakhs it is 20% margin. There is 20% margin to be borne by the customer, and above 75 lakhs it is 25% of the margin. Rate of interest. It again varies from bank to bank. The processing charges also varies from bank to bank, and some banks usually waive the processing charges in order to attract the customers, especially when it comes to housing loans. So what about disbursement? A disbursement is usually upfront in case of a ready flat or a house. Okay, and repayment is highly flexible. It is maximum of 30 years, and in case of construction, moratorium period up to 18 months can be given. Moratorium period is they give a cooling period up to 18 months when it comes to construction. We have another topic under housing loan called the housing loan under PMAY. PMAY is the Pradhan Mantri Awas Yojana, which was launched on 25th of June 2015, which intends to provide housing for all in urban areas by the year 2022. In this, the credit-linked subsidy scheme is being implemented. Here, the primary lending institutions, which include the scheduled commercial banks, RRBs, state cooperative banks, have to sign a MOU with the central nodal agencies like HUDCO, National Housing Bank, or central nodal agencies in order to provide housing loan to the urban poor. Here in this chart, we can look at the different income criteria and the reduction in the EMI for EWS, that is economically weaker sections, and LIGs, right? EWS, LIG is lower income group, and MIG, that is the middle income group, which is further divided into MIG 1 and 2. So here you can see that what is the annual household income, dwelling unit, what is the carpet area that they're giving you, and what is the reduction in the EMI, and what is the overall savings that you can have under PMAY. Okay. So home improvement loans and home decor loans are a part of the housing loan, and it varies from bank to bank. Usually a margin of 20 to 50% is taken in the case of home improvement loans. So this is about the housing loans. Next, we will move to the auto or the vehicle loans. Banks generally adopt a model involving the manufacturer, dealer, and the financier. So here The financier is nobody other than the bank. Okay. The eligibility is as the housing loan only. Here the person should be salaried employee or a professional, etc. The purpose is the purchase of two or the four-wheeler, which could be new or used. Quantum of loan, there is no ceiling stipulated by most of the banks, but net take home should be 40 to 50% of the gross income, and this is true even with the housing loans. So next is the margin. So margin percentage will be 10% for new cars and 25 to 30% for the second hand cars and 10% for two-wheelers. Okay. And next is the rate of interest. Rate of interest again varies from bank to bank. And security here is the hypothecation of the vehicle itself. So you are giving the vehicle itself as a security. And third party guarantees are taken in case of NRI loans. Okay. And repayment period. So repayment period for four-wheelers is maximum of 7 years. And two-wheelers maximum will be 5 to 6 years. So this is about the vehicle loans. Personal loans. Personal loans are basically unsecured in nature and are backed by personal enterprise or guarantees. Only here we can see the purpose usually will be either for clean unsecured loans or secured loans. Under the clean unsecured loans, we have the marriage expenses, medical expenses, education of self or spouse, or for repairs or renovations, etc. But when it comes to secured loans, it is to meet some of the social and financial commitments or purchase of consumer durables. The type of advance here is usually demand or term loan or overdraft facility. The security is usually hypothecation charges on assets, collateral security in the form of pledging of gold or Kisan Vikas Patra, bonds, LIC policies, etc. So this is about the personal loans. Educational loans. Educational loans, the main eligibility here is that the student should be an Indian national. Okay, he should be a Indian national. And banks may decide based on the employability and the reputation of the institution concerned before you give the loan. The eligible courses in India would be graduate or PG degree courses conducted by the recognized colleges or universities, or courses offered by one of the reputed institutions like the IITs, IIMs, and XLRI, TIS, etc. When it comes to studies abroad, graduation from reputed university and post graduation like MCA, MBA, MS, etc. Quantum of finance. Maximum up to 10 lakhs for studies in India and maximum of 20 lakhs for studies abroad. In the recent budget which was given, it has been told that e-vouchers will be given to 1 lakh students. Okay. And margin up to 4 lakhs is usually nil, and above 4 lakhs, it will be 5% in case of domestic studies and 15% in case of studies abroad. Okay, we have one more thing called the CSIS, which we need to see here. CSIS is nothing but the subsidy scheme which is being given out by the central government, right? It is called the Central Sector Interest Subsidy. Okay. As I said, it has been given by the Government of India. It provides full interest subsidy during the period of moratorium. That is the course period plus 1 year. So if it is an engineering course, it will be 4 years of engineering course plus 1 year of moratorium. So for that period, there is a scholarship which the Government of India gives to students belonging to the economically weaker sections. So when it comes to eligible expenses for loan payable to college will be Reasonable amounts should be given for lodging and boarding. And when it comes to examination fee, the actuals will be given. Travel expenses will be only one way. Insurance premium for students will be actual. Caution deposit or building funds should not exceed 10% of the tuition fee. Purchase of books or computers, study tools should not exceed 20% of the tuition fee. So this is about the eligibility expenses for the education loan. So what about security? Up to 4 lakhs, there is no security. But for up till 7.5 lakhs, we are supposed to take a third party guarantee. Above 7.5 lakhs, apart from the third party guarantee, we should also take some tangible collateral security um, when it is crossing 7.5 lakhs. Okay, and the rate of interest again is usually very minimal uh, because education loan is one of the priority sectors in India. Okay, so this is about the educational loans. So when it comes to processing of retail loans, they follow two types of methods, right? One is the standalone model and the other is a centralized model. The standalone model, retail loans are independently processed at the branch level. The discretionary powers are given to the branch head, and if the proposal exceeds the discretionary powers, they will be referred to the regional or circle or zonal offices of the bank. But when it comes to centralized model for retail loan processing, here we have something called as the RLPCs. That is a retail loan processing centers, under which we have the retail loan factory, retail loan hub, retail loan processing centers, asset processing centers, and retail loan branches. Okay. So here in the standalone model, we have a better understanding of the customer requirements. And there is no standard approach. Okay, there is no standard approach here. The retail loans are only one part of the faster multiple activities that the branch does, because branch is also doing other activities other than giving out loans, right? So there is a difference in the quality of appraisal, uh, and it is based on the branch, and the documentation standards may not be uniform. It might be based on the customer profile, and it is very subjective. But when it comes to centralized model, it is completely based on the documents because there is no direct human touch. Okay, and they have standardized approaches. The quality will be uniform and the processing time will also be uniform. And there is impersonal appraisal standards and professional documentation standards will be followed when it comes to centralized model. So far, what have we learned? We have learned about the home loans and what are the eligibility, what is the purpose, what is the security, rate of interest, etc. And under home loans, we had the PMAY, Pradhan Mantri Awas Yojana. What were the different subsidies that were given under PMAY? Next, we had the auto or vehicle loans, under which we learned the different eligibility criteria and what is the loan quantum or rate of interest, etc. And similarly, in personal loans, we looked at the secured and the unsecured loans. And next, we had the education loans, under which we saw the eligibility quantum, what is the security to be taken, what is the margin, and what kind of expenses are we supposed to give, what to be considered, etc. So next we had the two approaches under under the retail loan processing, which was the standardized process and the centralized model. Don't forget to subscribe for more insights into the world of banking. Stay tuned, stay informed, and keep banking the Bhavani JAIIB way. Thank you. And next up, we will be learning the next unit, which is the credit and debit cards. Until next time, happy banking.